Welcome to Case Study Series in Information Technology by Skilled MBA Usertip's early-stage financing journey highlights critical considerations for startups. Initially, they focused on concept development and validation, securing a pre-seed round to kickstart product development and customer acquisition. As they approach the seed round, strategic planning becomes essential to ensure readiness for future growth and Series A funding, which demands a proven business model and significant traction. Usertip's journey began with concept development and validation of its digital adoption platform. After successfully raising initial capital in the pre-seed round, they initiated product development and early customer acquisition. The next milestone is the seed round, requiring strategic planning. Series A will focus on scaling with a proven business model and significant traction. Determining the right timing for raising funds is crucial. Raising too early can lead to significant equity dilution, while waiting too long risks depleting capital. A higher valuation reduces dilution but increases growth expectations. Balancing control and capital involves structuring investor terms carefully to maintain decision-making power without compromising growth potential. Strategic financing options include bootstrapping, which maintains full ownership but limits growth due to capital constraints. Raising a seed round accelerates market entry, but involves equity dilution and board seat negotiations. Alternative instruments like convertible notes and simple agreements for future equity offer flexible terms, delaying valuation decisions while providing potential access to investor expertise. Simple agreements for future equity and convertible notes are key financing tools. Simple agreements for future equity offer no interest, no maturity date, and simpler documentation. Convertible notes accrue interest, have a fixed maturity date, and a more complex structure. Both may include valuation caps and discounts, delaying formal valuation until a priced equity round. Early dilution significantly impacts founders, pre-seed, and seed investors, as well as the employee pool. Each funding round reduces founder ownership, emphasizing the need to balance growth with control. Understanding these dynamics is crucial for maintaining strategic influence while securing necessary capital for expansion. Singapore's startup ecosystem offers significant advantages. Government support through grants like Startup Singapore Founder provides non-dilutive capital. Its strategic location serves as a global gateway to Association of Southeast Asian Nations markets, attracting international investors. A strong talent pool is bolstered by world-class universities and immigration policies. Favorable tax incentives further enhance Singapore's appeal for startup headquarters. When selecting investors, prioritize those offering strategic value beyond capital, such as industry connections and market access. Evaluate their track record with business-to-business software as a service and digital adoption platforms. Ensure alignment on growth vision, exit timeline, and market expansion. Personal compatibility is crucial as the investor relationship is long-term. Valuation for digital adoption platforms hinges on key metrics. A 35% user growth rate indicates product-market fit, while a 90% retention rate shows lasting value. A 45% gross margin suggests scalability. Industry benchmarks value digital adoption platform startups at 8 to 12 times annual recurring revenue, with premiums for enterprise logos, upsell capacity, integration, proprietary technology, and domain expertise. Highlighting Usertip's unique technology and founder expertise, we differentiate from competitors like WalkMe and Pendo. Our team leverages deep domain knowledge to innovate and deliver superior solutions. This competitive edge is crucial for capturing market share and driving growth in the digital adoption platform space. Beware of control terms like multiple liquidation preferences and full ratchet anti-dilution. Economic terms such as participating preferred shares and cumulative dividends can be detrimental. Ensure founders have pro rata rights. Engage experienced startup counsel, understand market standards, and prioritize deal breakers. Building competitive tension in term sheet negotiations is crucial for favorable outcomes. Enhance capital efficiency by adopting customer-funded growth through annual upfront payments and multi-year contracts. Forge strategic partnerships by co-developing features and exchanging equity for marketing. Utilize remote-first talent by focusing the Singapore office on core functions. Explore non-dilutive options like government grants and venture debt when revenue metrics align. Explore strategic vision and financing structures to balance capital and control. Leverage ecosystems and manage investor relationships effectively. The Usertip case study highlights the impact of financing decisions on growth, founder control, and long-term value creation. Understand trade-offs in early-stage financing to optimize company trajectory. Thank you for exploring the Usertip case study. For more powerful startup strategy breakdowns and funding insights, follow Skilled Master of Business Administration and subscribe to our series. Learn deeply, transform digitally, and lead responsibly.